What's up everyone, it's Ryan here again, and today I'm going to tell you the story of how I turned a $10,000 initial investment into $71,087.91. I'll be giving you a breakdown of my history and background with crypto, how I was able to make such great returns, and provide you with the strategies that I plan to implement moving forward. So take a seat, grab something to take notes with, and let's jump into it. So to give you some context, I've been a crypto enthusiast and investor since August of 2017. Which is when I opened up my first Coinbase account and purchased my first full Bitcoin from one of my best friends. And at the time, I really had no idea what crypto was. Hell, I wasn't even an investor back then. I just kept hearing about this crypto thing and figured, why not? I want to risk some money, see where it takes me, and it turned out to be one of the best investments I ever could have made. My initial $3,000 investment was just enough to be able to buy me an entire Bitcoin. And shortly after, I saw it rise from $3,000 all the way up to $7,000, where it had peaked at the time. And just as quickly, I saw it drop all the way back down to $6,000. And a naive, younger investor version of me saw this volatility and said, I've made my money, it's time to get out. However, as most of us know, if I had just held on to my Bitcoin a month or two longer, I would have been able to sell it for $20,000, which was the peak of the 2017 bull run. And although I was kicking myself about not holding on to my Bitcoin just a tad longer, I was still thrilled about doubling my investment, and at this point, I was hooked on crypto. So I took some time during the bear market to study crypto, understand how it works, and learn about some of the new technologies that are being developed to solve some of the world's issues. And what I quickly came to realize is that crypto is one of the largest transfers of wealth that you and I will ever see in our lifetimes. And whether you believe in the technology or not, it's here to stay. During the bear market, I continued to dabble in crypto, and I had some minor wins, but also some losses. But the biggest thing I learned is that the Bitcoin bull run has actually happened 2 other times prior to the 2017 bull run. The bull run's actually pretty predictable. How is that possible, you ask? Well, when Satoshi Nakamoto, the mythological alias, creature, founder of Bitcoin, founded and created Bitcoin, he programmed into it that the reward for mining a block would be decreased by half after every 210,000 blocks are mined. And currently that happens about every 4 years. The reward for mining one block went from 50 Bitcoin down to 25 Bitcoin, then to 12.5, and finally down to 6.25, which is where it sits today, thus deeming the event the Bitcoin halving event. So why is that important? Well, I want you to imagine taking all of the available gold in the universe that hasn't been mined yet and in one day cutting it in half. It's simply a fundamental characteristic of supply and demand. When the demand of something is high and the supply is low, then the value of that something increases. And for example, we're seeing this right now with the price of oil and gas. As Russia and other countries tighten their grasp on their oil supplies and halt distribution, it causes yours and my prices at the gas pump to be significantly more expensive than they were just a year or two ago. So although Bitcoin is a digital asset and it lives on the internet, it is a finite asset, meaning there's only so much supply that can ever be mined. If we run out of supply of gold here on the Earth, there's a high likelihood that when Elon Musk figures out space travel and mining asteroids, that we're going to find more gold on more asteroids, increasing the supply. You can't do that with Bitcoin. It's expected that the last Bitcoin ever to be mined will be sometime in the year 2140. And more importantly, if we dig into the charts and data, which we will here in a second, we see that each time the bull market begins, it's tightly correlated with each of the halving events. We see here that the first halving event was November 28, 2012, and at the time, Bitcoin was stagnant at the price of around $10. Within just exactly 1 year of the halving event, the price went from $10 all the way up to $1,007. And that's an 8,069% increase, which is just nuts. And if we look at the charts, we can see that it peaked at this point, then it crashed, and then it recovered a little bit and went sideways for a couple of years until the next halving event. Now, if we look at the second halving event, which was July 9th, 2016, and at the time, the price was around $700 and rose all the way up to $20,000 in December of 2017. That's a 2,757% increase just a little bit over a year later. Now, having known and studied about the 2 previous halving events, the one in 2012 and 2016, I was pretty closely tracking when the 2020 halving event would happen. And as soon as it did happen, I started buying into the asset as much as I could personally, which at the time wasn't much, thanks to starting a solar company the previous year with my business partner. And at that time, we were just worried about keeping the business afloat and putting as much money as we could back in the business, make sure that we could cover our butts. As time went on though, our business continued to grow, shift, and develop due to the changing landscape that the 2020 pandemic caused. We began to really find our rhythm, and we started to generate some serious revenue, which meant the company was able to save money. Meanwhile, my business partner and I just continued to pay ourselves just enough salary to basically live off of. And although I was working 6 to 7 days a week trying to build my business, I was following Bitcoin and just the whole cryptocurrency market pretty closely, just seeing when this thing was going to take off. And in November of 2020, that's when I started seeing the headlines come out. Bitcoin was on the rise. Large corporations were starting to add Bitcoin to their balance sheets, and that's really what sparked the whole idea. So I called for a meeting with my business partner and I laid out all the details. I told him about the 2 previous halving events and how it correlated with the bull run and how I've been through this before personally and invested in it personally. Basically called for an investment into Bitcoin. I told him that we should invest $10,000 total. $5,000 into Bitcoin and $5,000 into Ethereum. He was a little reluctant at first, but we had enough funds saved in the company account where even if it had gone to zero, it wouldn't have been completely detrimental. He agreed. He thought it would be a good investment. So November 24th, 2020 is when we made the investment. It took some time to see some results, but a month went by and all of a sudden our $10,000 investment had grown to over $15,000. And at that point, we had another discussion and agreed that there was still some room for this thing to grow. Big headlines were continuing to come out, like Michael Saylor's MicroStrategy, Elon Musk Tesla were adding Bitcoin to their balance sheet. So we decided that it would be a good idea to put another $10,000 in, split evenly again between Bitcoin and Ethereum. So at this point, it's now February of 2021. And as you can imagine, we were ecstatic. Business is booming and our investment into crypto had more than doubled. Life was pretty good. Business still had capital to spare and we felt like this thing still had room to grow. We decided that we would put in one final investment of $5,000. Again, split evenly between Bitcoin and Ethereum, which at the time brought our total dollar amount in our Coinbase account to $52,714. You know, you think at that point, everything is going great. We've been in a steady trajectory. It's going up, it's going to the moon. It's gonna hit $100,000. And 1 week later, our investment dropped down all the way down to $43,000. It was a bumpy ride, as you can imagine. But fortunately, luck was still on our side and the bull market continued. And we rode it all the way back until our Coinbase account reached a dollar amount of $55,000. And at this point, as you can imagine, we had to take a serious look at what the heck had just happened. I mean, our $25,000 investment turned all the way into $55,000 in only 4 months. We had been extremely lucky and had great results. And as the famous saying goes, bulls make money, bears make money, but pigs get slaughtered. On April 13th, 2021, Bitcoin had reached its first peak in the bull run, just over $64,000. So thankfully at that point, my business partner urged that we take out our initial investment and at least some profits to lock in our success. And to which I ended up agreeing to. So on April 15th, just 2 days later, we ended up selling $40,000 worth of Bitcoin and Ethereum. And just a short 3 weeks later, we ended up selling the remaining $7,201.86 worth of Bitcoin and the remaining $23,886.05 worth of Ethereum, which means our total investment of $25K turned into a grand total of $71,087.91. That's a 184% increase thanks to crypto. So I have to say, we were very lucky and we practically ended up selling at the very peak of the first bull run in 2021. And if it wasn't for my business partner, I might not have played it as safe and played it as smart as he did. So I have to thank him for that. But here are the lessons that I learned in this entire investment journey that I've embarked on over the last 4 or 5 years. and that I want to share with you so that you can implement into your own investment strategy. Number one, buy in when the market is low and shortly after when there's a big crash. Looking back on the bull run of 2017, I wish I had continued consistently investing into Bitcoin and other cryptocurrencies I was interested in right after the big crash. And if I had done so and just set up an auto recurring investment, I probably would have had hundreds of thousands of dollars, if not millions, sitting in the bank right now. But fortunately, it is something that I've learned from and am now implementing into my current investment strategy for the bear market that we're in. I continue to buy into my favorite crypto assets every single week. It's simply set up on autopay, and will continue doing so until the next bull market begins. And just as another tip, I've tried a ton of different markets. I've tried KuCoin, I've tried Binance. I personally prefer Coinbase. It's easy to use, it's user-friendly, it looks nice, it's fun. And I've actually subscribed to Coinbase One, which allows me to mitigate all trading fees and have account protection up to $1 million. And in my opinion, it's worth the $20 subscription fee or whatever it costs every month. So, and again, what I'm doing is I've set up small investments every single week into about a dozen different assets. You can pick and choose which ones you like. Just do your own research. Set up an auto payment, recurring weekly investment, and just set it and forget about it. For me, it's a non-negotiable. It's something that I've just budgeted into my monthly budget. If I need to adjust the amounts or reduce a couple coins every so often, then I'll do that. But it's something that you just have to budget around and set up and forget. And for those of you who don't know, this method is called dollar cost averaging, which essentially means you just purchase and sell in smaller chunks. And by doing it this way, you mitigate your risk. My business partner and I actually did a form of dollar cost averaging during this last bull market. We put much smaller and manageable chunks into Bitcoin and Ethereum, and we just tested out the market to see where it would go. And as we saw it to continue to increase, we saw headlines, big companies investing into it, trading volume was through the roof. We continued to put more investment into Bitcoin and Ethereum. And same goes for when we started dollar cost averaging out. We secured our investment and some profit. We sold everything. We saw Ethereum continue to rise and go through the roof, and Bitcoin stayed pretty even. And at that point, we just said, we're good. We made our money. Let's take it out. Now I'm just taking this a step further, and I'm dollar cost averaging in years before the next bull market is going to start, so I can take advantage of these low prices. If it goes up a couple thousand, goes down a couple thousand, it doesn't matter to me. I know this is going to be a multi-year investment before I start to dollar cost average out. The second point I want to make is don't waste your money on trying to get rich quick in crypto. I've wasted a lot of money personally trying to do these different methods and make a ton of money in a quick time frame. And what ends up happening is you just lose your money. You ended up spending way more than you think you will, and it doesn't turn out in your favor. I've tried leverage trading, which was heavily influenced by BitBoy Crypto, and it went terribly wrong for me. I started investing into NFTs, which I didn't do enough research on, didn't understand the market. Actually, my NFTs went up in value for a bit, but my MetaMask account was hacked and my entire account was drained. And was it user error? Probably. I probably could have done some things to make my account more secure. But the fact that that can even happen is terrifying. There's no way to get your money back. MetaMask can't do anything about it. OpenSea, the NFT marketplace, can't do anything about it. So the fact that that can happen is terrifying, and that's why I personally choose to stick with a company like Coinbase and have the protections that they offer. So to summarize all this, the crypto market, it's a wild ride. It's widely unregulated, and in the day-to-day, it's very, very hard to predict, if not impossible to predict. But what has proven to be consistent and reliable is the correlation between the halving event and every single bull market that has happened. If you feel like you've missed your shot, or maybe you're too late to get in, don't worry about it, you're not. This is actually a really great time to start buying in. And this is also probably a great time for you to mention that I'm not a financial advisor. This isn't financial advice, but what I would do and what I am continuing to do is just set up my weekly auto investments, a small manageable amount that's an amount that I can afford to lose, and simply forget about it. Again, this is simply my opinion, but it's based off of my 5+ years of investing in crypto and the lessons that I've learned. I hope that you all at least took 1 or 2 good nuggets away from this video. I'm not claiming to be a crypto expert or some guru. I'm simply just a guy that makes videos on YouTube and tries to help people out based on my own mistakes and lessons that I've learned. So with all that being said, thank you so much for watching. I really appreciate your time, and do me a favor, if you like the video, hit the like button, subscribe to the channel so that you can stay up to date on future videos that I post. I will see you all in about 2 weeks.